Good morning everybody, and this is your Dow Jones setup for today. So starting off on the daily, because if you look at the DAX and the S&P 500, we have hanging men on both charts. And if you look at the Dow Jones, you can see we have an all-time high, and we closed above the previous all-time high. So that is in itself very, very, very bullish. Also, you have this big inverse head and shoulders here. Lots of structure forming for a continuation to the upside. I think the moves last week would have been pretty tough by the looks of things, but we'll get down to that on the lower time frames. But right now we're waiting for the Feds, so I don't see us really going beyond where we are at the moment, although yesterday was a pretty solid day. Now if you start dropping down to the 8 hour, you'll see we did have a pin bar rejection, and then we had a close above. They're going into the actual market close. Oscillators are grouped to the upside, so it does look like top of range, big cup and handle, big head and shoulders, whichever way you want to look at it. Strong move up, flag, move, continuation, and then also double bottom break could be a retest as well. Anyway, let's get into the lower time frame so we can just see what makes the most sense. So from the 3 hour perspective, diversions, and we keep creeping higher with this big pin bar rejection, and then eventually an all-time high close. So yeah, don't like it. I would like to see structure lower down, and if you look lower down, there is so much structure. I'm not going to draw all of it in. Let's just put 2 major ones in. So there's a strong zone and there's a gap in the zone, and that is at around 41,129 and 41,036. So what's going to bring price down to this? Either a flat, in other words, no rate cut, will definitely bring it down, possibly even all the way down to the lows of 40,000 or 40,100. And could also happen if it is as expected. So if it's a 0.25 basis point cut, market may not be happy with that as well and force it lower. What will force it up is probably anything like a 0.5% or 1% cut in the rates, which would just accelerate the upside at a chronic rate of knots. But you can see the structure that we broke through last week, and that was on, by the looks of things, Friday. Let's just get down to lower time frames. Yeah, so we got above it on Friday and then accelerated. But if you look at where the opportunities were, so the first opportunity was definitely at 4,087. Would have been a tough entry, to be honest, because I think a lot of people would have been waiting at the gap close, as on the S&P and on the DAX. They all had gaps here, but you can see that did not materialize. It basically aimed for the next level down, and if I scroll left, you can see that there's no real zone or no real level of support on the hour. Even if you come back to the 3 hour, you can see it's not really a strong level, but that's what happened anyway. Typical of the market. So that would have been a tough one, I think, and that would have also been a tough one because you would have missed that one on Tuesday. So yeah, I don't think there was much opportunity here last week. If you just follow the rules, easy to say, yeah, I would have jumped in there, but I definitely would have jumped in there, missed the gap, and then the next level of support, which was a daily's level, was also missed. So there's no real indication that with an opportunity there. And then the next level would have been here. Okay, there was a pin bar on the 15-minute. There's a pin bar there, and that was 40,700, 40,702, and a little bit more structure to the left there. So Tuesday would have maybe been a better bet. Big inside bar, and then an engulfing bar. So there would have maybe been an opportunity there to ride that thing higher on Tuesday. Wednesday also coming back onto structure here, at 41,130, but an extended period of time there. If we look at what happened yesterday, this is 15 minutes now, so moving with the trend to the upside, big move up, broke through the all-time high, and obviously you take profit immediately. You don't try and assume that it's going to break through that structure and continue running, and it came back. So I suspect you're probably going to range today. I don't think you're going to get anything else out of this today. What I would do is just bring that structure down, 41,550 area. That would be the area to watch. There are gaps all the way down here, right the way down to, let's just move this level to something that makes more sense, and just below 41,217 is also a gap. Strong diversions in play between here and there, and you can see oscillator still moving, prices not really moving to the downside, so it may be moving down, consolidate, and then another leg up. But I am looking to buy, definitely. The question is whether we're going to continue this tight channel that we're in, or we're going to pull back while we wait for the Feds and find structure lower down. That would be my preferred setup. But I'm not trading until the Feds are finished with their song and dance. So I will sit back and wait, which means we're not trading until probably Thursday's time frame. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.